Start recording. Yeah, all right. So let's talk about what went down in last week. Now, let's get rid of this. Let's get rid of that. These two yellow lines I'm going to come back to just now. So last week, I made a shit ton shorting this from up here. And the logic we used again was that this is some kind of correction that we're in. And from my clip today that I reminded you guys of, it was 1, 2, 3, and an X wave or failure swing, and then 1, 2, 3. That was the logic behind this, and I said that we shouldn't get back above this high for this to play out, right? In yellow, make it red. And what I was targeting was actually this high right here. That's where I shorted right there in London. It was about 2 a.m., 2 to 3 a.m. And then I managed to capture, so I had a long inside here, somewhere here, I caught up here, and then I shorted this and I held that position right until we took this sell side liquidity right here. And the reason for that was, you'd remember me saying that when we were at this point here, and I put a foot projection on this, when we came down here, we'll just zoom in there. When we came down here, we hit the 3.5 standard deviation right there. 24,738 was 3.75, but I was looking for 4 standard deviations, which is right here. Okay, 24,649.75. And from past experience, what generally happens, or what I noticed, is that when they do something like that, they go to 3.5, get a small retracement, they then push for that 4 standard deviations very hard. So that was the whole idea here as well. We front run the 4 standard deviations here, we retraced, and I wanted to push for the 4 standard deviations, which they did. They took out this previous Friday's low, tagged that 4 standard deviations, and we just started pushing off those lows. Now, these levels, if you remember the FTE RJB or the Godspeed model, when we look on a daily, you'd see here, down here, this level down here is the beginning of this bullish RJB right there. You can see they tagged that one, the low on Friday was 24,626, and this this RJB, the opening of this RJB was 24,629, right? So less than $3 difference. Then when we look on a higher time frame, like a 5-day, same story, except the RJB now starts here, OLR here, CSD here, retracement here. It was 72650. That was the level there. So a lot of things to bounce off of. But I wasn't sure today whether, give me a sec, let me just get down to some lower time frames. I wasn't sure today whether we'd, because of Friday here, whether this would want to start pushing higher and whether we completed a delivery down here. Now the quick gauge for me generally is, anytime you find a high or low, or swing high or swing low, and you want to see whether the delivery has changed, the general consensus is that you find, in this case, the swing high, 25,830, and if you're looking at a daily, at this point to this low right here, it was 1 to about 3 daily candles, right? Which means if I wanted the delivery to change and start a new delivery, if I just take the width of these 3 daily candles and put them to the left, to the right here, it means we have to take this high here, 25,830, by today or tomorrow. Now it's looking very unlikely that we are going to do that. So the alternate count that I proposed, let's go down here, was that just like this intermediary wave or delivery here, right, which becomes a failure swing, this is doing the same thing here. So in this one, what the actual markings would be, it's all three-legged. It would be A, B, and C, and then you follow it by an X wave, which is an interconnecting wave, and then we had A, B, and C. And if this after the C's that these corrections are over, like in this case, let's take a look here. If we apply the same logic, this move down originated here, ended there. So if I wanted to start a new delivery, I take the exact width of the start of this delivery to the end, and we would have had to have taken that high, and we didn't, right, in the same amount of time or less. So by this point we should have been above this high. So there's no displacement, there's no speed, which means this is a nothing. Okay, so it becomes a failed expansion, a failure swing, and it's actually labeled as an X wave. So in Elliott wave, what we have is after an ABC, we label it a W, and then when you have a failed swing or a failed expansion, it becomes an X, and then a Y would be labeled as another ABC. But in this case, what I think is happening is we are getting an extra correction coming in here. So what that means is we had an original ABC, we had an X wave, we have an A, a B, and a C, and we're going to get an X wave coming in here, and what it's going to go down is going to put in another three-legged correction of some sort down here to complete this. So that means, let's do this. And let's do that. Which means at some point here, it's either that we've completed this X wave here, and we're going to go down like I proposed. If you look at the video last week, what I said was we get an X wave, we do something like this, 1, 2, and 3, and we complete. And the end game is obviously the Trump candle low. But when we look at something a little higher time frame, it would most likely be 5-day FEG sitting inside here, this red box right here. So if you go back down to the lower time frames, this is what happens when this leg here becomes a failure swing, right? It becomes an interconnecting wave. So X here and X here. Interconnecting means it's connecting the first 3 ABCs, or first three-legged move, to the second three-legged move. If this was over, we should have been above 25,830 already, and we didn't, right? By tomorrow, I don't think we would be, which means this also becomes a failure swing or failed expansion. But we're sitting at a point here when I don't know that this is actually over here yet, which means I have to assume that whatever's happening inside here, we can use the same analogy or same logic, this low to that high, take it out here. It means we have to clear this low, which is Friday's low. Let me just get that a bit more accurate. We have to clear Friday's low. I'll leave this box on here. We have to clear Friday's low by before 10 p.m. tonight. So in the next half an hour, I think. Yeah. So we have to clear this low, which would give me somewhat of an idea that this delivery has ended here and we're beginning a new delivery to the downside. If we fail to do that and then this just starts to mill around at the wick CE down here, it means this X wave is not complete and there's a likelihood that we do something like this right here. We go A, we go B, we go C, we come back for Monday's high on Tuesday, and then we start heading down for Monday's low down here, and then we do this, and then we do that. Okay, so that's going to be the sort of plan I'm looking at. Now everything is obviously always fractal. What you see on a lower time frame usually or generally means I have to see something similar on a higher time frame. But if I see something on a higher time frame, it takes precedence over whatever I see on a lower time frame. So if I switch over to a higher time frame and we put on this little wave tool that I have here, which draws, it's not actually this one. It's this one. So if I put this guy on, you'll start to see it print the actual waves out. We can go on a daily. And yeah, let's make this black. Black. You'll start to see what I'm talking about here. There's your leg down, there's the three waves, there's your leg down, a single move here, there's an A, there's a B, there's your C, and now we're in something here. Now, initially what I had this as, like you see here, is that from here we either still in the X wave and then we push down, but when I zoom this up just a few bits to like a weekly, here is where it gets a bit crazy, because what actually this actually means here is we've got an initial move down from the highs like that. We had this move up from the previous Friday's low. We have a move down which has taken that low, and we have some sort of retracement going on here. Now this retracement, if it becomes an X wave, it would actually be the second leg of the next move down. So it would look something like this. And then we would get something even more violent than I originally planned down here. What I actually wanted this to be initially was my favorite fractal, like that, which meant this would have come up this high, back to last Wednesday's highs. But that doesn't look likely at this point. So we're going to be stuck with this kind of idea here, where we're at this point right now, and it looks like this seems to be the way this may go. This is where we are. You see it here. which means we short a turtle soup of Monday's high, and we take that to, there's Monday's low, should be around here. But what we're actually going to do is we're going to take it lower, because what happens here is that this now on a higher time frame needs to have a relationship footwise from this high to this low. And if we ended something here, right, let me just show you something quickly. If I took, let's do this. First of all, let's make this yellow. We cleared this low here, right, last week Friday. You can see that the wave has printed below this previous low right here. Now, if we do the same logic that I did here, from this low to there, right, from the beginning of this wave to the end of that wave, and we do something like this, we just about cleared there. We just about cleared this low. It should have been ideal if it printed just inside this box, but you can see that we cleared this low in more or less the same time that we took to form this high here. So it makes this a possible correction to what's going on from here to here. So what that would look like was a move down. We're now going sideways or correcting inside here, and we're going to get another likely a fib related, let's look at it here. Where was this guy? So from here to here to here, projected down, one deviation or one standard deviation gets us somewhere right here, Trump candle low. Okay, but I know that this, if it prints this way that it is now, shouldn't get us to just one standard deviation here, because this should not be a three-legged move coming off this high here. So it means that this is likely going to get us probably down there, which is a 1.618 extension of this initial move down. So it means we have a move, a correction, and then the start of another move, which should give us again 5 waves. We move down in 5 and we correct in 3. If you didn't see me mention that last week, was it 27 minute? Right, again 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. There's no 5 here, it's actually a 3. And then we ended up with 1, 2, 3, 4, 5. And again, you see what's going on here? There's no 5. So if we're not starting a 5, it means we're not headed in that direction, because 5s are directional. 3s are opposing the actual direction. So we came in here, let's get rid of that, and we seemingly have a 1, 2, 3, but if you notice here, we're not getting a 5, we were getting most likely another 1, 2, 3. We'll get something like this, I suspect, because this is a correction in itself. And then we should get another 1, 2, 3, 4, 5. Right? Can you see how directionally in the in line with order flow, we move in fives, we correct in threes, we move in fives, we correct in threes, move in five, correct in three, move in five. So if you're seeing something correct in three, that means you're either expecting another five or another three to finish this off. Now, this could very well be the start of a 1, 2, and then we do a 3, 4, 5. Yeah, sure. That's very possible. It means that this leg is over here. We made the first move down. I would look for this retracement in a 1, 2, 3, and then I'd look for another five legs to the downside. Okay, so it all depends on what's going to happen here between today and tomorrow. My ideal idea, like I said, would be let this fail here, chop around here, right? So we get another 1, 2, 3, we chop around here like that, and then we get a boost up to take Monday's high, and then we zoom down like that, take Monday's low, start a new 5. Right, so that's just the logic. The move up for, let's have a look here, what you're saying, sorry. Yeah, so what happens is, in wave theory, I'm actually going to pull out that Mastering Elliott wave and do a quick summary video of it. So what happens is, let's do it this way, right? Directional waves, right? This is order flow, this is the direction, this is the trend. They would move in fives, right? So whatever the trend is, it would be 5, labeled 1, 2, 3, 4, 5. They shouldn't be equal in length. The middle leg is generally the longest, and the fifth leg is generally the same length as the first leg, right? So it would look more accurately like something like this. Legs 2 and 4 are anti-trend or against the trend, and they tend to move in threes, right? Or we could get something like this. Now within a 5, there's a smaller 5. And within an ABC or a 3, if we had something like this, my favorite fractal, it moves in 3 for the first leg, 3 for the second leg, and 5 for the last leg. But it doesn't necessarily have to move in 5, because directional waves don't necessarily have to all move in 5s or subdivide into 5 here and then another 5 up here. They could be one single or a set of up candles, like just printing character, that don't have any subdivision. So what you would see, CJ, is just one singular move to the upside like this. It won't necessarily have to be a 3. If it's a 3, it's not what we think it is. If it's a 3, it's more a combo correction of a 3, a 3, and a 3. But if it's a flat, then it's a 3, a 3, and a 5, or a singular, just up candles printing up here to the to finish this off at Monday's high. So if you're looking for something here, it's why sometimes I tell you there's one more leg up, because if you picture what this would do, it would do the first move, the second, we'd get this move up here before a point of interest, and then it would go sideways, and I would say one more leg up, or hashtag one more high, hashtag one more low. It's because 1, 2, 3, 4, 5. I'm expecting 5. Wherever I expect 5, I expect the one more leg up. Now, what you guys would be more comfortable with, right, is when we look at this here as a market maker model where you have your first stage of distribution, your second stage, and then from 2.5, this should be 2 to 2.5 standard deviations. From here, we push down to 4 standard deviations. So your fib retracement would look something like that, right? And then we'd get something like this. Second stage, and then this pushes down like that. Right? So you would know this as a market maker model, but a market maker model, if you think about it, is just waves being printed like this: 1, 2, 3, 4, 5. First stage, second stage, terminus, right? So for me, when I look at this, I'm always looking at a MMXM in this view. So here, it's either we're gonna go up in a 3, but I expect a mini 5 or just a set of up candles printing like this, CJ. This is the ideal. So we Turtle Soup Monday is high, and yeah, we're in for a good short, because what happens is for this trend to now complete, the trend line to use is from the B to the B. There. The moment we cross this guy, the BB trend line, everything below it is complete. It's finalized, it's over. We're starting something new to the upside, right? So we'll keep that on. But if we get Monday's high tomorrow, ideally tomorrow, it means we're in for some fun, because the least we get, the least would be the length of this here. So 1, 2, 3, the length of that, projected from like this X wave where it completes, let's say somewhere here. We would get Trump candle low at the least. Yeah, tomorrow's short should be call the Donald, unless we just start fucking this up tonight, right? Between today and tomorrow, if we don't do what I think is going on here, it means I missed the boat up here. I was actually looking for this rejection block here to get traded to. Now we did trade to it. Let me just make that red. We did trade to it, but I'm going to get rid of this. This was not part of my model, because you must remember we were looking for a failed CSD below this low from the AM, right? We wanted a failed CSD here below this low to buy this up. Now it didn't close below this low, but it tagged the rejection block. For me and this model, I couldn't engage here. I just couldn't engage here. But what I did do was I bought this down here. Let's have a look. I'll tell you. Yeah, so this one I didn't engage here. I bought this down here. I bought this down here looking for this high, and then for us to die. And I bought it, yeah. So we came here, we went higher, we dipped here, created the rejection block, we CSD'd here. I bought this tap right there, full margin. Right there. And my idea was, let's have a look here. Long position, bought here, stop below here. And the idea was to get to the top of this rejection block, just about here, back into this rejection block up here, so I can short it down. Now, it came here and it started to fuck around here. And when I looked at LD Pro, let's just put these on, I noticed that I'm just going to get rid of, in fact, not get rid of, let's just make it right there. Okay. I noticed here that the long today came off of 1 wick to the tick almost of ONS, right? Was 1 wick deviation here. It was almost 0.25 of the 6 to 9 a.m. The run up between 9:30 and 10 tagged the 6 to 9 a.m. high before it died. Right there. And the drop comes back for the 9:30 to 10 low right there. Now this is where it got a bit messed up here, because when we tagged the 9:30 to 10 low, the long that I took here, I actually wanted something like that, because ONS highs were sitting here. I don't know if you guys can see that. So I was looking for 9:30 to 10 high or ONS highs here. But I had to close when it started to fuck around here, more especially when we started to close below here like that. It means we created this rejection block here. Anything that comes back into here should be for fading, because that's the model. But more so, I thought about it like, I thought about why does price, sometimes, let's take this, this is a clear example. We took sell side here. This should want to go for buy side. If we took external, I was actually looking for external, but if I was, I don't know, less tired or whatever, this would have just been the low hanging fruit there. Internal, external here, internal here, and then just die again. But I asked myself, like, why does something have to retrace deep before it gets to the objective possibly? And the only answer I came up with was that when we were, it's mitigation, right? It's nothing but mitigation. So at this point here is where we were. We didn't mitigate the 81 CE, or we didn't mitigate anything on the 81, or was it the 27, right? We didn't come back and mitigate the weak CE or anything here before we started pushing higher. So I said, okay, possibly that, and at that point that I closed my short, I said, there's a possible small retracement coming in here, expecting wick CE at most, because if you look at what the model printed here on an M9, we do this, we do here, draw it out in time. There's your rejection block ideally here. You come up here, we long this, it wicked it here, but doesn't negate the rejection block, right? Fail CSD again, price pushes up, this is where it got shit, because we had a CSD here, and I was looking, and I told you guys 25,02250. This is the beginning of this rejection block, so I was looking for a long inside here. Now the long that I actually took was same story, it was down here. Let's just make this yellow. Right, rejection block, CSD, I bought here, I bought here, it ran up here, and the moment it ran up here, I was actually expecting 25,110. I'll tell you why, because this started to look very triangular in the sense that we had a very violent move up, we took the low here, we then made a lower high, and then we were coming back to make a seemingly what looked like a lower low. I'm thinking something like this, right? 5 legs, A, B, C, D, and we come up here like this, and then we die. So my long was gonna come to about here, and then I was gonna short that. And the sole reason was when I put and these fibs have been like super great, because when you put these fibs on here on this leg down, sorry, here, this leg here, and ACW, I was looking for this retest reload point here, because you'll notice here, and I'll show you another example as well. You notice here, your first entry, it wicks through, it comes back, it gives you that first entry, it wicks through, it comes back, it gives you that second entry. It just pushed through the reload, through the 50%, came to the rejection point down here, started to look like rejection. I wanted a retest and a reload, which actually could have been a rebalance, and then the fallout. So we actually went way past that. But if you look at, I posted earlier for Natalia, yeah, I think it was Nat. It was, the short that I took was based off the same idea from up here to down here. Right, you can look at it here in its entirety, and if I had the same setup still on, I should have actually just kept my shorts. So here's your first entry here, you can see it here. Here's your second entry, here's your retest and reload, comes down, rejection point, we came down here, and then we shut up back way, retest and reload, comes back down. Where does it go to? Point of control, or 50%, and then starts dying off again. This goes well beyond its TP. So if you look at how these fibs should work, is you fib the mirror leg. So if I was expecting any downside at this point right here, I fib from this low to that high, and I wait for it to start pushing through the first entry. The words on the right of the fib, pretty simple. You double click it. I've extended the lines to the right, Slatus. And then any labels you have could be, there's the text here, text on the right, right and in the middle. Right and in the middle, and then you extend the whole lines to the right. So it's there, I can see it, but it's not in the way of any current PA that's going on. So I could have very well or easily have done something like this. and start to think about this as being a bigger move. Here's my first entry coming in here, second entry in here, retest, reload. POC was the low today, which is 50% of the range. It shoots back up towards the first entry, come back down, POC, shoots back up, gets stuck at second entry, comes back down. So imagine now if, like right here, it shoots back up here to the retest reload point. I'm gonna fucking take this all the way back down here, or even something more. But that doesn't quite fit in with what I have planned. So what my actual plan would be was maybe reject here, come down here. Friday's low gave us, I think, an M9 bullish rejection block, which is sitting right here. Okay, we'll get rid of this and get rid of that. So there's your bullish rejection block here. I want to see whether we F this up or fail to close below it, or fail CSD, and we can come back from Monday's high. So Monday's high is going to be the ideal short that I would want to take. I hope they give me Monday's high. I really hope they give me Monday's high before fucking anything up inside here. Once they start to fuck things up inside here, it's I'm gonna have to go to like lower time frames to see what's going on in order to engage on any retracement. K-Buck, were you asking me about how to use those fibs? I can't remember. Someone asked me how do you use the fibs. I hope that answered the question. So what I was telling someone today was, they told me they're good at passing evals, right? Good at passing evals, but something happens when they move on to a funded or live account. They just keep blowing them. And the advice I gave them and what I saw for me in the past 2 weeks, you guys know what I've been doing the last 2 weeks. I've literally been shorting this at almost every single high and low, and holding them for a day or two. Yeah, I'm sure you can, K-Buck. But the biggest change for me that I can tell you that has changed how profitable I can be is patience. Firstly, patience. Secondly, let me see if we can find some examples, because what actually happens is we've become and it was actually an example on the way up at that point. It's a good example. We've actually become accustomed, like this was a long I wanted to take here, right? This was a long I wanted to take. But we've actually become so accustomed to, especially when you miss a move, that you, like here, right? Here. That you just want to take the opposing move against what the trend is, because you missed the initial move in the first place. I missed the long, so now I must only look for shorts. No. Like I said before, we have to accept that they will try their best not to CSD here, like they tried their best at this AM's lows on the 27 minute not to CSD a few times. they will try their best here not to CSD. So our job becomes simple. It means we don't, let's do this, console high, console low. I don't buy a high thinking that this is going to break out and I'm going to become a millionaire. No. Every time this approaches a high, this is when I'd look for a short, because I want to sell console highs. If I'm wrong, it's going to close above here, come back into the range, and then I'm going to long again. So this is the actual long you should be taking on confirmation or a close above the consolidation high. You wait for the retracement to long. I'm not buying any kind of fucking breakout or whatever I think here. It's the same on the downside. I'm not selling at these lows thinking that this is going to break out and just going to fuck off without me. No. I will wait for confirmation, retest, carry on. This retest is like, the market's somewhat of a fair market in terms of it will always offer you at least one opportunity to mitigate. So say I shorted here, it retraces here before doing something like this. This was an opportunity to mitigate any losses if I wanted, or the same the other way around. But the idea is I'm shorting highs and I'm buying lows. I'm not thinking how can I sell this low because it's gonna fucking break down and just leave the station without me. I'm not. Here's another classic example just to the left here. We close above, it comes back in, you buy that. Because if we look at the model presenting itself, we could look at something like this. Right there. There's a low, there's a high, there's an OLR, there's a CSD, there's your retracement to rejection block. Gone. I'm not thinking at this point, oh, there's an FEG, we closed it. This is MSS. We're heading lower now. Right? We close here. I'm shorting here. I'm putting my stop above there. Or it moves a bit here. I'm going to go to break even. No. I'm not thinking that. So that's one of the biggest things I had to change was do the opposite of what I used to do, where I'm not anticipating or looking for a breakout or front running any breakout to the upside or anticipating or front running any CSD to the downside here. I'm actually going to sell that and I'm going to buy that. And if they confirm here, right, and I sold here and they did something like this, they gave me an opportunity by retracing here to do two things: mitigate my loss or come out in profit or break even on my short, and then go long here. If you look at the highs today, rejection block, CSD, retracement, it just wicks the top of the rejection block but doesn't invalidate it, closes back inside the range, and then all of that happened. All of that happened. I'm only engaging when this fucking model shows up for work right here. This guy. I'm not front running anything anymore. I'm not thinking that it must do, because look here, it didn't do it here, it didn't do it here, 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 here. It's not fucking doing it anywhere besides here. So I could have been wrong and bought this low. It comes here, I go break even, I get stopped out on a long. But then I know that if they've given me a CSD here and they fail to expand, this is going in the opposite direction. So I'm only really going to be wrong once in this logic of buying these lows, buying the low, buying the low, buying the low, buying the low, bought the low, it moved up, and then I got stopped. I was wrong here. It must be going the other way because they've given me a CSD. So changing your mindset that we should be looking for breakout longs here or anticipating CSD here is the wrong fucking mindset. What we should actually be doing is selling the consolidation high and buying this consolidation low and using the logic that they will not CSD here. And if they do, if I bought this and they do, I had an opportunity to mitigate and go short and capture all of this. Does that make sense? I'm only ever engaging with this model when it shows up. If it doesn't, and K-Buck knows this because I plot them all the time, and if it doesn't show up, then I'm literally not fucking doing anything. Because when I look at my model, if I find a real high, an OLR, a CSD, I'm selling this. I'm selling this to wherever. It came down here on a 15-second. I found this model here. This is the one, I think K-Buck said you always get the good entries. This was just narrative. We took sell side, I wanted to deliver to buy side, but I actually wanted higher. And I didn't get it. There wouldn't have been a short here for me unless I use the idea of selling consolidation highs, or one more thing that Rota actually showed me, which gives you somewhat of a zero drawdown shorting opportunity, is that we're always looking to the left for any, let's see if I can find one, or one that I took. We're always looking left. There's one here, I think. Right? We're looking for the bag at the EMA. So at this point here, this was a bag sitting here. Draw it out, draw it out, draw it out right there. Make it black, make it a bit darker. These are the EMAs at this point right here. When we cross back over this bag here, and the rejection I'm looking for is at an EMA at the bag, and I think I showed this to CJ as well earlier. We're shorting here. We're shorting here. The moment it crosses back over these smaller 1 minute or 15-second EMAs, it crosses over here, you short the retracement into the bag. And this was supposed to have gone just below here where we expected the failed CSD. So this ended up being, what was this, CJ? 196 points. You can see the same sort of logic worked here off the bag, except there's no EMA here. So if there's no EMAs here, but there's probably EMA here, I just have to find a bag to the left here. Right, we have one here. Let's do this. Find the bag. If you find the EMA, find the bag. Find the EMA, find the bag, trade the bag. Now I didn't even look at these two shorts today in that view. I looked at this one here. But when you're approaching an EMA, look back and find a bag. The bag I want is usually the bag in the direction of the move I expect. So I'm not looking for a bullish bag here if I expect downside here. Does that make sense? It's the same here. I think it was M9. And it was here. Right there. EMA, bag, cross over the EMA. This was a shot that Rota actually took, by the way. Something like that. And ended up going all the way down here. 450 points. I think this is also a short I took here. Can you guys remember that for me? When you approach an EMA, look left for a bag in the direction that you want to trade and trade the bag at the EMA. Does that make sense? Yeah, it's cool. It's cool because I think I took another zero drawdown, and I think I posted these that day, was something like that. It was this one. We closed here and I shorted this candle right there, and then it just fucking died. Zero drawdown. All I needed was the bag to be hit and close back below in EMA. Now you don't have to always use an M9. M9 is cool. M9 is probably or was probably character at the time. So yeah, M9 was nice. You could use depending on where the EMAs are, I suppose. Like if I'm on an M1, could I have found something here? Most likely, if I expected. This is not even a bag yet. I mean, it could be. You could do something like this. You see here, EMA in a bag, EMA in a bag, EMA in a bag. So yeah, you're not always using an M9, but what you are using is if I find an EMA, I'm going to look to the left and see if I can find a bag. It's not going to be any bag here. So these are the EMAs I want to short, let's say around here or here. Look to the left, I find a bag. Oh, there's a huge one here. Is there any other nicer one more to the left? There's probably one here. Yeah, there. Let's get rid of this. Make this a bit lighter. Yeah, there's your bag, and there's your EMAs. Trade the EMAs at the bag. Probably be look a bit neater on an M9, I suppose. So on an M9, was it this one? It actually would be one higher, right there, and you'd be trading bag here, EMA here, we close here. You'd be if you were still on an M9, you'd be shorting this candle right here, at least. This is the only other time that I'm not waiting for the Godspeed model to work. On this one, I'm looking for continuation, because I probably missed a Godspeed here. Price is moving. We're approaching EMAs, so I'm just going to be looking for EMAs and a bag to the left. So yeah, change the way, like you don't get to do what I've been doing and holding these trades. I mean, what did I capture just last week alone? I shorted the top here, I longed here. It was probably like 1,300 points. Like I caught about 200 there, and from this RJB up here all the way down here, up here all the way down here was 1,000, let's say 1150 plus 200, 1,350 point move. Today I did about 330 there, and I longed down here to here was another 225, and then this one I got stopped out of break. It's about 550. Yeah, Christy, that's a lot, but remember, I also caught, so my shorts have been paying me better than the long. So like at this one, I totally missed this entire move up here, but I longed here to get there, right? I longed here in London to get there, and I shorted that down. Previous week, I shorted here and here. I closed, I shorted here, I shorted here and here. I held all of this down to about here, and then I closed it somewhere here. So I gave a bit back here. Missed all of this, long here, and then just short all the way down here. Closed it somewhere here, not even in this wick. I think at this point right here, my shorts were sitting at about 125, but I gave some of it back, and I withdrew 25. Yeah, so it turned out to be about the week turned out to be about 130, 135. But yeah, this is, I'm only doing these things, right? Like I didn't engage here because the rejection block model didn't confirm for me to engage. It didn't come up here. If it did, I would have shorted there. It gave me a rejection block here, but it didn't confirm the CSD here, so I couldn't short this guy here according to the model. And I'm only really looking for that model. So it means that the same model can work tomorrow, but I have different expectations up here. If we get here, I probably expect a wick of the rejection block, close back inside the range, Monday's high gets taken, then we start parting. You guys probably get another 1,000 points out of this. Easy. Trump candle low is about 1,200. No, I lie. Yeah, is it? Yeah, should be about 1,200 points lower to the Trump candle low from Monday's high. So let's say we take Monday's high and we hold that shit, 1,200 points. I'll do it. I'll hold it. I'll hold it. Because I know once they get here, they're going to front run this 5-day FEG here. And they're going to do some kind of shit like this. So let's say we do something like that. We come down here. They're going to front run here, and then they're going to do something like that. Retest these lows, or EQ inside here, or this failed rejection block sitting inside here, and then they're going to come down here. That aligns with the three-legged move that I have in mind to complete this guy here. Right, I think I said a lot of words today. I don't know if any of those words meant anything. But these are just the intrusive thoughts that I have the entire day. This is how my mind's working or overworking or working overtime. You guys have any questions? So key takeaways: don't be a dumbass and try to front run a CSD. Buy the failed CSD of a low. Sell consolidation highs. Don't try to buy a breakout of a high. Don't try to buy a potential CSD or breakout of a low. Wait for confirmation. In terms of entry model, use Godspeed only if it confirms. So I was looking at Godspeed, like I said, I was looking at Godspeed on an M27 here, and we failed CSD twice here. Even though it got back to the rejection block, I couldn't engage. This would have been like an absolute banger right here. Because I would probably be targeting something like this. Let's have a look. Yeah. Right there. This is what, 400, and stop is too wide. 20 points. 560 points down. It's fucking madness. It's crazy. But that doesn't mean you can't get this tomorrow. Or if you guys are awake and playing in Asia, let's play with something like this. Let's see if we can get something here with about 25 to 30 points that takes us to here. 681 points. Let's see. If you guys come right with that in Asia, let me know. I just want this guy tomorrow. If I wake up and I see we took Monday's high and we're back inside the rejection block here, I'm just gonna short. And lastly, so we spoke about console highs and lows, failed CSDs, and lastly, buy the bag at the EMA, or trade the bag at the EMA. Don't buy the bag. Trade the bag at the EMA, long or short. Okay, there's no more questions. I will send the recording to Expo. We've gone into detail what the plan should look like tomorrow, and how we're going to try and get another potential 680 up and 1,200 down. I mean, what is that, like 2,000 points? I don't know how many of those you guys need. 100, 200. I want all of them, but I'll probably only most likely get 1,000 or 1,200 down. I'll try and hold that one. No problem, action. Plan is set. Only thing that can fuck it up is Asia fucking through these lows. And your daily EMA is sitting right here. This daily EMA is something that we wanted all the way back here. You remember Rota said we want the daily EMA. Didn't get it. It's been creeping up. Didn't get it. Didn't get it. Didn't get it. Now we're there. Right there. It's actually coming to us. So let's see what goes on here. Hopefully some of you can swing short this with me tomorrow. And hopefully some of you try and swing, or not swing long this. Yeah, hopefully some of you try and long this to get back up here, only to short this down. Yeah, I'm gonna send it now, Nat. Let me press stop, and I'll catch you guys